Most people think investing is for disciplined people, the organized ones, the spreadsheet people, the ones who wake up early, read financial news, track markets, and somehow always seem ahead. And if you're not that kind of person, if you're tired after work, if you procrastinate, if you feel overwhelmed by money, you start to believe something dangerous, that maybe wealth just isn't for you. But here's the strange truth most people never realize. Some of the most successful investors in the world are not the hardest workers. They're the laziest. Not careless, not irresponsible, just unwilling to complicate things. And that small difference quietly makes them rich. But to understand why, we need to talk about something most people never admit: how exhausting money feels. Imagine this. You've finally decided to take control of your finances. You open YouTube. Immediately, you're hit with videos like 10 stocks that will explode, day trading strategy that made me $20,000, how to beat the market. Your brain lights up. This looks exciting, fast, smart. You feel like if you just learn enough, research enough, try hard enough, you'll figure it out. So you begin. You watch videos. You read articles. You download investing apps. For a few weeks, you feel powerful. Then something strange happens. The more you learn, the more confused you become. One expert says buy. Another says sell. One says crypto is the future. Another says it's a bubble. You open the app every day. Your portfolio goes up, then down, then up, then down again. And slowly, investing starts to feel like a second job. Eventually, something inside you shuts down. You stop checking, you stop investing, and life continues. Quietly, you tell yourself, I'll figure this out later. But later rarely comes, and years pass faster than anyone expects. Here's the uncomfortable truth. The biggest enemy of investing isn't lack of intelligence, it's exhaustion. Your brain is not designed to manage thousands of financial decisions. It's designed to avoid pain. And investing, when done the wrong way, feels like constant emotional pain. Fear when markets fall, greed when they rise, regret when you miss opportunities, doubt when experts disagree. Your brain hates uncertainty, so it looks for control, research, analysis, predictions. But the market has a brutal habit of humiliating people who think they can control it. Even professionals struggle. And this is where the lazy investor has an unfair advantage, because lazy people hate complexity. They refuse to spend hours researching. They don't want to watch charts all day. They don't want investing to become their personality. They want one thing: simplicity. And ironically, simplicity wins more often than genius. There's a famous story about an investor named Ronald Read. For most of his life, nobody noticed him. He worked as a janitor, then as a gas station attendant. He lived in a small town, drove a used car, wore simple clothes. Nothing about him looked wealthy. When he passed away at age 92, something shocking happened. His neighbors discovered that he had quietly accumulated over $8 million. Not from trading, not from complicated strategies, just simple investing. Over decades, he bought solid companies, held them, ignored the noise. While the world panicked, he stayed still. While people chased trends, he waited. And that patience created something powerful: compounding, the quiet force most people underestimate. Compounding is strange. At first, it feels almost meaningless. You invest a little money. The growth is small, barely noticeable. Months pass. Nothing dramatic happens. This is the moment most people quit, because humans crave visible progress. We want proof that effort is working. But compounding doesn't reward impatience. It rewards time. Years later, the numbers start changing faster. Then something magical happens. Growth begins to grow itself. Your money starts working harder than you ever did. And suddenly, what looked boring becomes powerful. But most people never reach this stage
Because they interfere. They trade too often. They chase hype. They panic during crashes. They constantly do something. Lazy investors don't. Not because they're smarter, but because they're unwilling to overwork. Pause for a moment. Think about this honestly. How many times have you complicated something simple? Overthinking a decision, researching endlessly, trying to optimize every tiny detail, and in the end, doing nothing. Overthinking is a silent form of fear, and investing attracts overthinkers because money feels emotional. It represents security, freedom, future possibilities. Losing it feels personal, so people try to control every variable. But control in investing is often an illusion, and sometimes the smartest move is doing less. Consider another example. A study once looked at different types of investors: active traders, professionals, regular people. But one group performed surprisingly well: people who forgot they had investment accounts. Some investors literally outperformed others because they never touched their portfolios. They didn't panic during crashes. They didn't sell during fear. They didn't chase trends. Their laziness protected them from their own emotions. This is something few people talk about. Your biggest investing mistake will probably not come from ignorance. It will come from emotion, fear, greed, impatience, and laziness quietly removes those triggers. Here's the twist most people miss. Lazy investing is not about avoiding responsibility. It's about designing a system so simple that you can't sabotage it. Instead of asking, "What should I buy today?" the lazy investor asks a different question. How can I make this automatic? Automatic investing, automatic contributions, broad investments that track entire markets. Instead of trying to beat the system, they quietly become part of it. No constant decisions, no daily stress, just time and consistency. Imagine two people. One spends hours studying the market, checking charts, reading news, making trades. He feels productive, busy, smart. The other spends maybe 10 minutes a month. Money automatically goes into long-term investments, then they close the app and live their life. 10 years later, the difference is often smaller than anyone expects. Sometimes the lazy investor even wins because the active investor made emotional mistakes, too many decisions, too much noise, too little patience. Now pause again. Ask yourself something honest. What if wealth doesn't require constant effort? What if it requires removing effort from the wrong places? This realization changes everything, because suddenly investing stops feeling intimidating. You don't need to predict the next big stock. You don't need perfect timing. You don't need to watch the market every day. You just need a system that continues working even when you're not thinking about it. And that kind of system fits perfectly into an imperfect life, a busy life, a tired life, a normal life. The truth is, most people don't fail at investing because they're lazy. They fail because they tried to behave like machines. Perfect discipline, perfect knowledge, perfect decisions. But humans are emotional creatures. We panic, we hesitate, we get distracted. Lazy investing quietly accepts this. It works with human nature, not against it. And that's why it survives long enough for compounding to do its work. Years from now, the biggest financial advantage won't belong to the smartest person in the room. It will belong to the one who stayed consistent, the one who resisted unnecessary action, the one who didn't try to outsmart the entire market. Just someone who started early, kept it simple, and let time carry the weight. No drama, no hype, just quiet progress. One day, you might look back and realize something surprising. The moment you stopped trying to be a genius investor was the moment investing finally started working. Because the market doesn't reward constant activity, it rewards patience. And patience, strangely enough, looks a lot like laziness. The kind that quietly builds freedom while you're busy living your life.